The cryptocurrency community has been rocked by a recent release from a Federal Reserve whistleblower that details what might be one of the biggest developments for XRP to date. The Federal Reserve intends to use XRP as the foundational technology for the future U.S. central bank digital currency, or CBDC, according to this classified paper. This is a revolutionary discovery that has the potential to drastically alter XRP's place in the global financial system. The leaked blueprint outlines a multi-phase strategy that will employ XRP's blockchain technology to enable more rapid, affordable, and transparent digital transactions on a national level. This goes beyond simply increasing the efficiency of payments. It involves completely rethinking the basis of the US dollar's operation in the digital age. There will be far-reaching consequences if this strategy is implemented. Such a move, according to many experts, would mathematically ensure a spike in XRP's price, maybe hitting a staggering $10,000 or higher each token. We must examine the scarcity math and market factors that support this projection in order to comprehend why this price objective is even being contemplated. Although there is a 100 billion token maximum supply for XRP, only about 50 billion are in use or in circulation at the moment. The demand for a digital asset that powers the CBDC might soar, given that there are more than 8 billion people on the planet, and that the US dollar is the primary reserve currency utilized for trillions of dollars in daily transactions worldwide. According to supply and demand dynamics, if XRP were to become the standardized settlement layer for both local and foreign digital dollar transactions, each XRP token would need to have a disproportionately high value in order to satisfy worldwide transactional demand. In reality, $10,000 per XRP is a price point backed by the economics of adoption and scarcity. It is not just hype. Additionally, according to sources, the Federal Reserve has been covertly experimenting with XRP's technology since 2020. The Fed's research teams have been assessing XRP's transaction speed, cost-effectiveness, security measures, and regulatory compliance for years, according to this insider information. The Fed's overarching mission to update payment infrastructure, cut expenses, and preserve monetary control in the face of expanding decentralized financial innovation is fully in line with this. Although neither Ripple Labs nor the Federal Reserve have made any official public announcements or partnerships as of yet, the leaked documents and ongoing pilot programs imply that talks and integration efforts have been going on for a while. In actuality, the leaked roadmap describes a staggered adoption strategy that starts with institutional use cases such as wholesale banking transactions and interbank settlements. Since XRP adoption as a settlement layer has the potential to significantly lower settlement times and costs for banks, foreign exchange markets, and cross-border trade. This is really important. The roadmap then predicts that, maybe within the next 5 years, XRP-powered CBDC transactions will be expanded into retail and consumer applications. In actuality, this implies that regular Americans may soon be utilizing XRP-powered digital dollars for online transactions, daily purchases, and even cross-border remittances. Instantaneous and fee-free transaction settlement has the potential to transform the way money flows in society and threaten the dominance of established payment networks like Visa, MasterCard, and SWIFT. Despite the enormous potential benefits, it's critical to keep a realistic outlook in this situation. Even while the document leak is convincing, it does not formally validate any Federal Reserve collaboration with XRP or Ripple. This ambitious initiative may be delayed or even derailed by political issues, technological difficulties, and regulatory obstacles. The Federal Reserve's approach to addressing consumer privacy issues, adherence to current financial regulations, and XRP's compatibility with legacy financial systems remain unclear. Furthermore, Ripple Labs is still being sued by the SEC, which raises serious doubts about the future of XRP's position in the market, particularly in the US. Before making any financial decisions, investors should exercise caution and monitor government pronouncements and regulatory developments. Despite this, the global shift towards central bank digital currencies is accelerating, and the larger crypto ecosystem has been changing quickly. Europe is currently investigating a digital euro, while nations such as China have already introduced their digital yuan. You are aware that it would be a significant change if the US entered the CBDC competition, particularly by utilizing a blockchain technology that has been proven to work, like XRP. Ripple is in a great position to spearhead this change thanks to its current alliances with more than 300 financial institutions throughout the globe. The company has a clear edge over many other blockchain projects that just lack that kind of institutional legitimacy because of its experience with cross-border payments and adherence to anti-money laundering laws. The demand for XRP tokens would skyrocket in terms of market impact if the Federal Reserve were to formally declare XRP as the technological underpinning of the US CBDC. Financial institutions, governments, retail traders, and institutional investors would all scramble to purchase XRP, pushing the price to be honest, previously unheard of levels. Thus, the combination of the increasing demand and the limited supply of XRP tokens makes for an ideal environment for a parabolic price increase. In all, Bitcoin, when institutional interest and widespread acceptance began to increase, even while Bitcoin has undoubtedly taken center stage, XRP stands out as a crucial infrastructure token with enormous long-term value potential due to its distinct placement as a workable payment protocol and a possible foundation for central bank digital currencies. Many commentators emphasize XRP's scalability and transaction capacity, which are genuinely essential for sustaining a global CBDC. In order to further explain the so-called 10,000 XRP theory, legacy financial networks are much